Hello traders, welcome back to another episode of the Traders Show. In this episode we're going to talk about bank runs, SVB collapse, Credit Suisse, and what is happening across the world when it comes to banks, especially in Europe and the US. Let's not talk about across the world. So we've seen two banks which have come near to the brinks of a collapse, and many people are panicking. I've seen memes move around, but I feel like most people don't understand what is really happening. And in this episode, we are going to shed some light on bank runs, history of bank runs, why they tend to happen, what they mean for the economy, and what the current one means for the economy. But before we start, I'll allow my co-hosts to introduce themselves.
Greetings, people. It's another episode, and I'm glad to be joining you guys again to share the updates that's happening in the markets. I think over the last 1-2 weeks, there's a lot of interesting risks that have been arising in the financial markets, and we've been watching them keenly to look at what is happening in the fundamental space. I think this is sort of a fundamental environment that is happening currently, and majorly it's affecting the banks. So that is the sector which is being affected mostly. As Ken has said, we've seen SVB Bank file for Chapter 11 bankruptcy. Basically, they can't be in operations anymore, and their deposits have been frozen fast. So we'll talk about what happened, what led to the collapse of SVB. It led to, again, fears, investor fears. Basically, will it cause a ripple effect to other banks, probably like what happened in 2008 with Lehman Brothers. So it's a very, very interesting time. I think it's just starting, and we are keen to look at how this will develop over the next few weeks. I think there's a lot of fears currently in the markets. Investors are fleeing into risk, less risk assets, basically, whereby they can diversify their money from the collapse that the banks is trying to bring into the markets. Ken has said also about Credit Suisse in Europe. So I think also we've seen that we saw Swiss National Bank coming again to try and help them. I think that's a very interesting topic for us to discuss today and share light with you guys on what we think from our research, from our own research here and there about markets, and also from looking at price action. I think we can also look at what has happened in terms of price action in the markets. On a few assets, we've seen cryptos, gold. I think there's some very, very interesting moves in the markets also. So we can talk about that also. And yeah, the history of the markets, probably how is this related to 2008? Is the market probably again gonna fall into a recession, which again we've been talking about a recession again for a very long time, since 2022. I think it's a worthy topic to talk about, and I'll be glad to share what I have on this.
Hey, what's up, guys? So I won't repeat what my brethren have said, my brothers. Today we're just talking about, we'll also tackle how banks work, because if you understand how banks work, now you'll understand why a bank run is not something any bank will ever want for them to have. And this can lead to a lot of collapse of not only the banks, but the financial system. And we'll talk about why the governments need to step in to rescue them, give them loans here and there. So it's important to understand how that works, because it can happen to you. You might never know. It might happen to your bank. I think there's a time, I don't know, did it happen to Chase Bank here? There was a time Chase Bank also had some issues. Yeah. Then people started,
even think
there's a little bit of a bank run.
Towards the end of last year, there was also Community Bank also had
in Kenya.
Yeah, Community Bank in Kenya also had a bank run issue.
Yeah, so if you know those, it's good to understand history so that you can prepare yourself for what risks are there. These are things Tarrus also talks about, hidden risks that are there, black swan risks, things that you're never expecting but can happen at any time. So we'll talk about that, different banks, what is happening, like they've said, and how banks work. But apart from that, I think I can start off just talking about how markets have been, because this has brought a lot of volatility in the market. And I remember we were discussing with my partners that when there's volatility, it's also a good time to trade, but it's also the best time to use proper risk. Because if volatility is there, it means markets are moving faster than before. VIX is up, the volatility index. How up did it go, Ken?
It went up about 10%. So we're now trading at around 25, 26 on the VIX.
Yeah, so on the VIX, having those are pretty high. It means there's a lot of fluctuations happening in the markets. So and if you see what happened today, what's the date? 18th.
Yeah.
Yesterday, I'm just mentioning the dates depending on the day this video will come out. On Friday 17th, the gold market, or let's say this past whole week for gold market, it has been up almost 1,000 pips. Market has just been going up, and this is also because of those risks that are happening with banks, people taking gold as a safe haven. If you've looked at the dollar also, a lot of fluctuations. We saw the other day, euro against the dollar strongly fell. The dollar was rising against the dollar. During that time when they announced what Ken was telling you about the Credit Suisse Bank, when that news came out, you just saw the euro falling, the dollar rising, yen was also rising at that time. So these are safe haven currency. So you need to understand this. It's very important. We learned these things a long time ago when we were reading, researching, understanding how
economic 101 trades.
Yeah, it's economic 101. Why gold is rising. Sometimes we used to wonder, how is gold rising and the dollar rising at the same time? We never used to understand, because we used to know if gold rises, dollar is going down. But later on you come and understand that they can both rise at the same time because of different things that are happening. And these are mostly fundamental. If you look at it only technically perspective, it's like you're closing one eye. You're not looking at it with full perspective. So we'll discuss about this so that you can understand. So if you talk about the markets a bit, for me, how's this week been? I was sharing with my partners because we normally have what we call a fund meeting. So we try and keep it professional when we're talking about the markets and we're trading. Tarrus is our risk manager. He'll always follow up at the end of the week. What was your risk for the week? Daily exposure. What can we do different following week? So for me this week, I remember I started the week, I think it was Monday or Tuesday, I went down 2%. Then on Wednesday, I took advantage of the gold rally, went up 4%. And then towards the end of the week, I was still looking for some dollar longs, but that didn't happen. I lost quite some money. This was on Thursday. Friday I didn't trade. Thursday I went down another 2%. So losing 2%, up 4%, then down 2%. Basically for the week was break even. So yeah, it's normal. Sometimes the weeks you're down negative, the weeks you're up positive, the weeks you just need to make money. But at the same time, I took the risk. It's better for me to take the risk than just see markets moving up, down. I had a position. That doesn't mean that you should trade again every day. That's not what I'm saying. Don't get me wrong. The goal is, if you see an opportunity in the market and your system is telling you take it. Don't. I'm sure many people go through this cycle of so when you start off trading, there's this journey we go through. You're very confident in taking trades. So you're always taking trades. Then you realize, I can lose a lot of money in this market. Then it comes to a point now you never take trades. An opportunity comes, you don't take, or you risk very small. I remember my partners used to make fun of me long time. I used to take small risk on a pair that doesn't move much, Aussie dollar. So I'm taking small risk. The market moves. I'm telling Ken I've made 1% or even less than that. So, but these are things that happen. So, but these days we came, you normally have to go through that spiral or that journey where you risk too much, then you risk too little, then you come and find a balance of what, depending on your risk appetite, what you're comfortable with. And yeah, basically that's it. So that's how my week was. It was a good week. Like I said, we were taking advantage. I don't take that much trades because those are about 5 trades for the week. I don't take that much trades in a week, but I was taking advantage of the volatility of the market and some other circumstances here and there. My partners know. So
it's tough.
It's normal. It's normal. In the market, sometimes you come and look for daily wages, monthly wages, and the market is always a good reminder. It's good to share the truth about the markets. The market is always a good reminder to tell you that when you come for it to look for monthly wages, daily wages, you want to pay rent, you kona madeni here and there, you want to pay those things. The market will always remind you that that's not how the markets work. And we've been discussing, and I remember we were talking about the markets. There's a lot of perspective on luck. Okay, so you'll always be lucky. Even if you're doing that, maybe you're looking to pay someone, you took crazy risk. If you bought gold when the week started, you made tons of money, even if you didn't know where market, because only 2 things you can do. You can either buy or sell. So if you sold, you lost money. If you even, because we were, let me not get into that, but Ken likes thinking about now who's selling the gold, who's selling, like
those people who are
losing money. Like it's easy for, and I'm sure most of you, if you're watching this, maybe even it happened to you. I'm sure many people bill your accounts. You're trying to catch a top on gold. Because gold reached 1950, people, let's sell. The thing is, the market will show you a signal. If you go to the 15-minute, you'll see some, what are they called? Some shooting stars at 50. That's a key level. Sell. You sold, you started going to your side. boom, you sold again maybe 1975 again. Who market closed yesterday at 1988? That's what we are looking at. So these things are normal. So that's how my week was. It was quite a volatile week, a good week to take advantage. And yeah, maybe my brothers will share how theirs was before we get deep into the topic.
For me, my week has not been so much. I think I had like 2 trades. For the week, I was short on euro and pound. I was right on direction but wrong on timing,
which is important. People don't know.
You are right direction because wrong on timing.
Like sold early.
Yeah. I was just a bit earlier, but it was a good technical trade. It was a systematic trade. Yeah, just that the system gave me a sort of an earlier entry. Markets fell from the next level of resistance, and I was out already. So I took my 2.5% loss for the week. Yeah, and I'm comfortable where I am now. I think
just 2.5 for the
week. For the week. But yeah, looking into some very interesting trades next week with the volatility coming. I think it's setting up environment for where my system thrives. So yeah, it'll be a pretty busy week. I think for those who know how I trade, majorly for my students, Mondays are active days. So looking forward to Monday to see
get some opportunities.
Get some opportunity to risk on.
Oh, so for me, trading wise, I have not been like my partners. I've had quite a lazy week in the market. I just had one position on Nasdaq. I lost on it. Didn't do anything else. As much as there was volatility, there was nothing for me to do. I'm very, very focused on not trading much nowadays. So I try as much as possible to stay out of the markets most times. I think that's one thing that is really, really helping me. So most times I'm not really in the market. As much as we have all these risks coming in, the volatility is high, like Caleb is saying. For me, I always wait for something to set up for me to take it. I'm not just trading because markets are moving higher or lower. Because I know, yes, opportunities will come. But those opportunities come with risks. So it's a balance of the two, and you really have to try and wait for when everything is aligned for you to come into the market and try and make a living. Because if you try and trade all the time, I think it won't generally work. So I just had a 1.5 loss for me. Actually, less than 1.5. I think 1.2, 1.3 on Nasdaq. And that was it for the week. Coming into next week, still not sure which positions I'll take. Waiting for markets to at least open up, shape up. See which positions are likely to be taken. Again, next week, Feds are coming in, so rates are coming out. So again, another week where fundamental risks are quite high. So the environment we have plus the Feds, it's a very, very technical environment if you're trading. You really need to understand that this environment we're trading in is an environment whereby your technicals can be thrown out of the window in an instant. So you could be technically looking at markets. The technicals have set up quite well. The chairman says something and the market moves this side. Another bank collapses, the market moves this side. So right now it's a very, it's not a stable environment really to be trading in. But again, you have to be adaptable if you're going to be making money.
What percent do you see the Feds coming up with next week?
I think they'll go for 25 basis points. I think that's the number I think they'll want to.
I think also the same 25.
Yeah.
With the current financial situation,
I don't think they'll go
market
for
situation
50.
also. I think 50 basis point can be a
bit aggressive.
Long shot.
Where the rate now? 4.5.
4.5 to 4.75.
Yeah. If you look at even the I've been looking at the 10-year yield for a very long time, but I had not started looking at the 2-year yield. So now I've brought in the 2-year yield. So I have the 2-year yield and the 10-year yield. Okay. So the 2-year yield is already pricing in rate cuts. It's short term, long term, we're not seeing rates keeping on moving high. And I think that's why you can even see markets like Nasdaq. This last week, we had very bullish runs. On the Dow, we also had some bullish runs coming in. So I think markets are again starting to price in probably a pause and slowdown.
Especially something like Dow, I'm waiting to see what the Feds will say, because if you look at the charts, the daily chart, remember the range I was showing you for yesterday?
Yeah,
Dow. Nasdaq has been going. Dow has been really playing within a range. So I'm sure when you see such things happening before Feds, I'm sure because we had ECB removed the interest rates the other day, increased it by 50 basis points, and now like Ken is saying, it's a tricky time fundamentally, because banks are hurting. Like these things are tight. The economy is hurting. Banks are hurting. So you can't just increase interest rates. So as much even if they're increasing by 25 basis points, people are hurting. I think people are more saving than spending. Like the economy is not. It's at a tricky place. So it's a tight time for the Feds.
I think.
And it's also important, like what to keep saying, when the Feds remove interest rates or any bank, like Ken yesterday was telling me, he's looking for the video. He didn't watch Lagarde's video, the ECB head, but you're looking to hear, you want to understand their tone, what they're talking about. This way now you get a perspective of the economy, not just the number. There's the number and many people just, like if you watch the markets a lot of times when news are coming out, and you guys can be doing that if you're new to the markets, there's the time the interest rates come out, then market is really volatile. And then 30 minutes later, when the Feds are talking, the rest of the other 30 minutes, you can see again market changing direction. Because then what they removed and what he's saying are two totally different things. So then this helps you also anticipate, okay, for the next month, what are we looking, or for the next year, are we looking for interest rates to reduce, to continue? So,
Yep. So
I think we can catch up from there now with the banks and
so I think I can say what bank run is.
Maybe
I'll talk about banks.
Bank run is, then maybe we can build up to what has led to SVB collapse and probably what we think can be the consequence of that moving forward.
So if I start off understanding banks, and I like teaching this in my, if you buy our book, Tarrus did a very good excerpt for how banks work, history of banks, history of money. So there's that part of how we came to having banks. But if you buy the book and if you come for a course, we can teach you all that. But to cut the long story short, basically how banks work, most people believe banks is a safe place where you give your money and they keep your money in a good safe account.
A big vault.
And you can access this money anytime you want. So they're just keeping your money. But truth be told, banks do not do anything of that. If banks were keeping money like that, and I'm sure you've watched Money Heist and all those things, you're seeing money is in a vault. These guys are going to steal. Those are movies. Banks do keep gold, and also they keep dollar reserves, especially the main banks of the country, like the CBK, such people. The main banks keep
each
those.
Each country has a central bank.
That's why you've been hearing Kenya saying the central bank is saying they don't have dollar reserves.
Exactly.
Out of dollar reserves. That's
so
actually what is making the Kenya shilling again collapse
because of that. The reserves,
because like there's more demand for the dollar now than for the Kenya shilling. Even locally.
Also for me, I'd rather go for the dollar than hold these Kenya shillings for what? So it's true, it's crashing. So banks do keep, like Tarrus saying, dollar reserves, and as well as
those are free trades, by the way. You should also recommend for people, if you have some money in shillings, convert it into dollars. Over the next 2 weeks you will be having some gains. 4-5% gain.
But now it depends with the place you get exchange rate. Unaweza finywa pia, so don't just go and some people won't do you nice. So basically central banks do keep gold and dollar reserves, but other banks, now if we're talking about the local banks, for those Kenyans watching, KCB, Equity, Stanbic, Standard Chartered, those big banks. Now abroad, if you're talking about this other JP Morgan's, Bank of America. So what normally happens when you give a bank your money, they don't just keep it. If they used to keep it, then you'll be seeing every bank with loads of security. Like there'll be security everywhere, or these big vaults, like Tarrus is saying, big vaults, buildings everywhere just protecting your money. But money needs to flow. When
you go to a bank, it has 2 police officers outside.
Exactly. So White has what Tarrus is saying, money needs to flow. So when a bank gets money, they use the money. That's why if you keep your money in a fixed income or a savings account, the small interest they give you, because when you give them that money, they're going to use the money. So they use the money to do different things. They can invest here and there, and mainly give out loans. So banks normally give out like 90%. They have a rule where, now this is what we call fractional reserve banking, where they keep 10% of the money in the bank. That's a requirement by law. And then the rest of the 90%, they're allowed to loan it out. Okay, so they can loan it. Now, I don't get deep into the fractional reserve because now this is how banks multiply money within banks. I don't get deep into that. I'll need a board to explain all that. But basically, they give out money. So basically, if you give a bank $1 million, let's talk in dollars for everyone who's listening. If you give a bank $1 million, they'll keep 900. They'll give away 900,000.
Yeah,
and keep $100,000. Okay, or if it's 1 million Kenya shillings, they'll keep 100,000 and give away 900,000 to loans so that they can earn an interest with it and all that. Now, this is so good as long as it's flowing. As long as people are depositing money and giving money to the bank, it's all good. Everything works out perfectly. People give out loans. They bring back the loan with an interest. Then they give you a small interest, which you don't even know, because interest rates, loans now, how much? Basically.
Currently.
Yeah.
Net.
Rate, what's the rate of...
Like the net rate return you can get from a bank, I think, is maximum 4%.
And what's the loan rate? What if they give out loans at what percent?
Like 13.
Around 13.
Yeah.
So let's say that. So the bank is making
currently they're getting it from the CBK at 8.5.
Yeah.
Giving it at around north of 10.
Okay.
Yeah. But for you as a saver, you're getting an interest of about 4-5%.
I'm sure it's even less because 4 or 5 is a lot. So basically, that's what banks, basically it's like you come and give me money. You're like, Caleb, I have this $1 million Kenya shillings. I don't know what to do with it. You take it. Now you give me, I go and invest it. When they get the money back, I give you back your $1 million. I have my profit. So I've made money out of thin air, just out of nothing. Okay. Just using my smartness and my wit. So anyway, so saying this works out fine as long as people are giving the bank money and as long as interest rates are also not so bad, it's going to work fine. But it comes a time when maybe there's panic in the country and people want their money back. Maybe they're not safe about something, they're not trusting the system or just something. It doesn't even have to be the whole country. It's just one bank. Maybe one bank has a scandal and people are like, there's a lot of things going on. Let me just take my money and keep it to myself or put it in another bank just for short term. Yeah. Now, what happens? It happens like a domino effect. The first person comes and takes the money. Now, remember, before I go into that, there's a limit for banks. And this is why we'll understand more why banks don't have most of your money. Per day, you have a limit you can remove from the bank. If you put $1 million, I can't just come and say, I want my $1 million tomorrow. No. Doesn't work like that. There's a limit I can remove every single day from my bank account, okay? If I want to remove more than the limit, I have to go contact the bank, the manager, sign here and there so that they can give me more than what I want. And it's my money, okay? So you remember, it's the system. It's how the system works. But now, it comes a time when you want to remove all your money. So one, you have to go to the branch. You can't just go to the ATM or use M-Pesa here locally or just send transfer. You can't just remove like that. So you have to go to the bank and remove the money.
But also it depends on the amount.
It depends on the amount. If you have a little amount, of course, you can just remove all of it. Yeah, but if you have a lot of money, which most people have kept quite some money, you need to go through that avenue I'm talking about. So anyway, so like I'm saying, it happens as a domino effect. The first 2, 10, 100 people come to the bank, talk to the manager, give me my money. And then word starts to spread. Okay, there's this scandal with this bank. Maybe the CEO has done this, or they don't have cash that they were talking about, or maybe they're making losses. This money that they took as a loan, maybe they are making losses from them. So what happens? People start panicking. And when people panic, what do they want? I want my money back. Now, when people start coming, they're coming, all of them. Now, remember, the bank has kept 10% of, let's say, there are 1,000 people who have given this bank almost 1 billion. This bank only has 10 million. That's 10%. The whole 900 million has, is it a billion? 10%, that's 100 million. These are the 900 million of all these people in Mepeanwa. So this first 100 billion has been able to sort the first few people who came. Now the rest, there's no money there. Now when everyone is coming for all their money at the same time, this is where now we get what we call a bank run. Everyone is running to the bank to take their money. Like I've said, there's no money in the bank. So now this even leads to more consequences of the bank, because this money that they want to give back, which is legally mine, and they don't actually have it. Yeah. So this is where you get bank runs. And this has been happening from time and time again. There's a quote I read. There's this quote I read the other day. It was saying the system, banks, the way they have been created to fail in the long term. Mm-hmm. Like with those fractionals.
Like the system is not sustainable.
Yeah, like one way or another soon.
Really?
Yeah.
Is that true?
if we can discuss about it, it's something that I also read, which to me sort of makes sense. The way it has been created in the long look, because in the end, how do banks survive? In the end, they're given out loans. The government do not save. The bank itself cannot
and
survive.
It was very funny. Credit Suisse was being salvaged by Swiss National Bank, which in its own is in a 140 billion loss.
Credit Suisse or the other bank?
Credit Suisse.
On a 140 billion.
No, there's the
bigger bank.
Yeah, exactly.
The Swiss bank, yeah.
It has like you are in losses and you're bailing someone who is in a loss. You see, like basically, I think what Caleb is saying is that structure of banking system is like it. The risk on that side cannot be covered in a rational way. It has to be covered by, again, borrowing more debt. That is why even for the Feds, they borrow money, pay part of their own debt first with the borrowed money that you've borrowed. You see, like you try and pay back your older debts with new debt.
Yeah, because what you're saying, it's the beginning of like the IOU. So from the word go, we cannot pay Feds back all their money. Because Feds, when they print money, they're giving it out to the government and to the banks at an interest. Where is that interest coming from? It doesn't exist. Exactly. So in the end, as in the way the system is, if you just think about it, in the end, it's a failed system from the start. It will survive. It can survive 1,000 years even.
That's why they have the liberty to create money now. If they didn't have that liberty,
yeah. So to cut my long story short, that's what a bank run is.
Just a question on that. But don't you think also, like the banking system in itself doesn't have a problem? It's how you run it. Because the other banks which are doing well, JP Morgan is doing well. Goldman has been in existence for more than 100 years. So I feel like the system in itself is not bad. It's how you run around the system that is bad. Because the others who are able to derive a profit from that same system.
But
most of them
not have failed doesn't mean they can't fail.
That's true. But then that's what I'm saying. You failing is not a function of the system. It's a function of how you run your business.
Yeah, true. And also that is why, again...
And you know, like I said, something that has saved them is like 2008 crisis. They were saved by the government.
Yeah, but those ones, you know, they're tectonic. Because even this one, if we just look at the Silicon Valley Bank collapse, to pick it up from where we left, part of the main reason why it's gone where it is what is happening in the economy. Okay? So, before we come to the, you know, when we are looking at it, you can look at it from a top-down perspective. Okay? So, if you look at it from that perspective, let's first of all look at the shape of the economy and what is happening there. Then we can trickle down to what is happening in the banks. Okay? Currently, the economy has 6.4, let's say. When we talk about the economy, unfortunately, we're always talking about the US economy because that's the main economy that we're trading and looking at. For us, we're focused on Europe and US, at least, okay? We don't look that much at Asia because hakuna mtu trade hapa Hang Seng ama Nikkei. We mainly focus on...
Hang Seng is currency for...
Hang Seng is for China.
Hang Seng, that's what it's called.
Hong Kong, huh?
Hong Kong, I think. Hong Kong.
Okay.
China is Shanghai. Shanghai composite, yeah. But anyway, so if you look at what is happening in the economy, we're at a point whereby, like I remember you shared a video. I've still not watched it, but it was
for money. There is money.
The edge of his money. Yeah.
So we're moving now from a period of getting money is going to be tough for the next 1 or 2 years. Even for those people who are here locally, just understand that thing will trickle down from US all the way to where you are locally.
When America sneezes?
When America sneezes, the whole world catches a flu. So we all know that.
Yeah.
So if you look at where we're coming from a period of just two years ago in 2020, we had helicopter money. The Reddit money, the money which were being sent checks by the government. That money was pumped, came to the economy. Fueled growth, brought in inflation. Now we're moving from that. We're taking money away from the system again.
Yeah.
So we're moving now money from the economy and it's being taken back to the system, okay, by the banks, okay. So we've created now an environment whereby rates are very, very high. Okay?
Yep.
So if you were making a profit, first of all, your profits have been discounted because you had borrowed, let's say, at 0, now you're paying 5% rate, and the business you are doing was bringing, let's say 5,000. Let's say it's still bringing the same 5,000, but I've still discounted your earnings because you're not
5%.
paying 0.
You're
now,
paying more
you're
loan.
5, right? So if you had over leveraged yourself, then
Becomes worse.
Yeah.
worse. Okay,
That's how you crash first.
exactly, you crash faster because you have your obligations now. Your debt is overweighing your income. Sasa unaanza kutafuta hizo bailouts minasema. Sasa ni okoe.
Save us.
Save us. Because now if you don't save us, we won't be in
We'll
business for the next few 1, 2, 3, 4 months. The same thing is happening to Credit Suisse. And I feel like this is just the beginning. Because if you look at it historically, any time where we've started seeing rates going up and you've started seeing the economy tanking, it doesn't come out full blown. It's not full blown. It takes time before it seeps in vizuri. But there are those red flags that zinatokeanga, those spikes, okay? So looking at what is currently happening, it's those spikes that we are getting. Now, the risks are becoming evident. Okay, so company X had over leveraged. So you guys now have a problem because there's no money anymore. So there's no easy money coming in to save you. So you guys have a problem. You must now think of strategy or how will we save ourselves. That's why savvy entrepreneurs, you'll find the likes of Akina Buffett, a guy has over 100 billion in cash pile. So hakuna tectonic shift inaweza shake. Because for him, he has a lot of money in cash. So he can be able to bail out even some of those companies.
Banks. Yeah.
But I feel like most of this, much of what we are looking at from these banks, Credit Suisse, Silicon Valley Bank, and other companies which we'll see.
Signature Bank.
Coming up
Signature
with
Bank.
problem. Even so others in Europe.
Yeah, I think for now, I think
BNP.
there are like over 200 banks now. People are
In
very
distress.
skeptical about it.
Them.
Yeah. Like their financial books now is the time whereby now guys are looking at, okay, where do our banks invest?
Bus.
Because those things are there in the books, but people don't know
People
that.
don't know.
Yeah.
So,
And people don't pay attention until the risks are there.
Yeah,
Until the
exactly.
music stops playing.
Thank you.
So guys have went and looked at so our banks may invest in long-term bonds in sijui
They're not performing well.
Yeah.
Exactly.
they're not
And again, if you had bought bonds, you remember, you buy bonds 2 years ago, you were buying them with 0.
rates.
Rates.
Now you're buying bonds at what rate?
4.
And actually that is what led to the SVB collapse.
Exactly.
You can
Because
just understand that
How did
interest
SVB?
differential.
Because you guys don't know what SVB is.
SVB is Silicon Valley Bank. So Silicon Valley Bank is a bank that was in existence for over 40 years.
Since 1983.
Yeah,
Or
it's
5
focused
decades.
mainly on investing in technology companies around Silicon Valley.
And they also hold most funds for
venture
startups.
capitalists,
Yeah.
startups,
Yeah.
right? Yeah. And unfortunately, now
Which was
they
a
were
total of worth how much?
203
billion
billion, yeah.
dollars. So, but for now, things are going south because of what is happening. So, unfortunately, like Lau is saying, they had invested a lot in bonds and
Long-term bonds.
long-term
even, to be
bonds.
worse.
And when they were buying the bonds, they were at 0. Now they are at 5. But you know, some of these things, I don't know. But okay, it's not like I'm trying to say like, but I feel like some of these things you can tell they're coming.
I think this is basically just a risk management failure.
Exactly.
If you look,
Like if you
So
just think
you're
about
saying
it,
you can tell they're coming from like within the bank or while you're watching from outside?
no, from the economy. It's not even from
Oh.
even the person who's making these decisions in the bank, like unafaa kujua. Like I feel like it's all about examining how the environments are changing.
Yeah.
You get, like, I remember when we invested in crypto heavily, we were very keen on knowing now we are moving from a period of easy rates to a period of high rates. And we exited our positions, right? So you came out of them. I always think like if you're making decisions for some of these big organizations, there are some risks which shouldn't take you out of business. I like calling them known risks. Okay? COVID is a hidden risk. That one can take you out of business because you couldn't see it.
Yeah.
You get like even Lawi anasema some of these failures are risk management failures. Like it's like even when you're trading these prop firms, I always remind myself that I should never get to a 12% drawdown because it's a known risk. It's something that you can see. Like there are risks you can't see. They are like what is currently happening. Gold tapping 12,000. That is a risk we couldn't. 2,000.
2,000, yeah.
It's
The banks crashing.
the banks crashing. Those are things you can't really think about. But there are risks that you can clearly see. This is a risk, and it's like Biden. Biden said, capitalists took risk. The system works like that. You must bear the burden. We won't bail you out because these risks are things you could see. So I also think we should have that. People should be more cautious in managing their risks, rather than just exposing themselves. Because if you had not managed the risks,
yeah, true. And I think it all boils down to that very important video we watched about Redial, like understanding the economic machine. I think if you want to be an investor, trader, it's very critical for you to understand these business cycles because that is where you make those pivots. You need, because for pivot, you'll be gotten in the wrong side of the market.
And once you watch that video, you can add on top a book called Mastering the Market Cycle by who?
True. Howard Marks.
18 good indicators of knowing we are pivoting from here to here.
And then also you add Changing World Order.
And you
By Ray Dalio. Changing World Order.
read those 3 books and you'll
really understand like how
Economics
shifts
works.
and how not to find yourself, because
Lakini si economy ya Kenya.
of course.
Okay, you'll understand it kidogo because it's a glimpse of it, but I feel like the workings of this economy and that one are very different.
But also I think the more you understand it, the more us in future will be able to help our economy. Because there's some things we are going to witness that this country hasn't witnessed. As you're familiar with what is going on out there. So, and these things eventually will happen. That times this country will borrow way more than we can even pay. Yeah. So when us we step in like the Buffett, he just did these things. He read history. Now people are coming to him because he read, understood, and he was also over here locally. I'm pretty sure as a consultant in future I will be guys financial hub.
Yeah, true.
Economies in distress. Bail us out.
Yeah,
KCB.
Also, I was really thinking about how resilient the market has been. If you've been trading markets, the markets, especially the stock markets,
strong.
These markets are strong.
Which markets?
All markets.
Let's just look at, let's say, indices. Let's focus on
Stocks.
Index futures. Even in UK, look at Dow. Dow is at 34,000.
With all these risks,
34,000.
It came back to 34,000. It came back to 34,000.
Yeah,
32,000.
Almost closer to 37,000 where it was.
It's down there. Yeah, it came close.
Yeah.
But now imerudi huku 31.
It had gone to markets are still high. Markets are high. Relative. Look at Nasdaq. Look at Nasdaq. Nasdaq is high.
If you look at Nasdaq is high, but Dow is not as high as Nasdaq. Nasdaq imeenda kuenda.
But I feel like
we've had more than 15% recovery.
Pardon?
Exactly. Me actually for now, with the current state of the market, with all these fears,
Dow
should be lower than where it is. Remember, we still have relatively high inflation compared to where we should be. Unemployment is starting to come up, and I was watching Powell testify to Congress that the other day, and how Senator Warren was grilling him with such hard questions. She was like, now you tell me, okay, we understand your pursuit is to bring it down to 2%. Okay. But at the expense of taking 2 million Americans out of the job market, Powell was like, it was very funny. I think you should go and watch that.
She was telling that guy, tell these people,
tell them
that you're going to take their jobs away from them and increase this interest.
Then Powell is like, again, the same people are still complaining about their income being cut. It's actually a very difficult job being
but I think Fed. I'd love to pick your mind on what you're saying. Continue on that. Like, given the current risks, where do you think markets?
Yeah, I think markets for me, Dow I think should be
down there,
down close to 25,000. Like exactly, we still have fears of a recession.
Heavily bearish on
and again,
markets,
now
heavily
bank runs is adding fuel to the fire.
Like even the risks are evident. The Nasdaq one in a create high.
That's a new high.
That's what I'm saying.
Okay, this is high, but for the last month,
it's still maybe for the year, but for all of them, like Dow. it's to me it's more of in a range like agenda sana like not even the short term achana hata na hii wiki they were saying like in the long term
it's still ranging between 32 34 35
yeah and if you look at long term technical analysis some people what they normally look at when market because we came from a rally you remember when came rally all the way
the last 2 years tumekuwa na strong rally
what 100%
you can easily be saying because what you're saying like you expect it to be down you're saying these prices need to be discounted easily we can start to see that this is a distribution phase and remember distribution is normally the time
so we had a first drop
yeah we had the first drop
then maybe probably a second one
now there's the sell off which is coming the big one the one ile
ya mwisho sasa ndo turudi bull factors
yeah in the end they'll come new highs will go even 40,000
if you think about those things Caleb inflation at 6% rates at 5% gold at 2000 rates at 5
when the gold can go
something that is not yielding an interest
anything 5% bana hizo market ziko dunia yake and that's why you should, as you're trading remember si tunawaambia hizi vitu hapa but we will never trade on these things we'll never trade we trade on Nasdaq next week I'll buy
short yeah these are long term moves you're talking about
exactly
in the short term if you see a possibility of market just going back to a previous high
and I think also I had a session I think on Thursday with my students on fundamentals and someone asked about like why is there that disparity because when I was teaching them about how markets work basically maybe when you're in a high interest environment probably things like stock will be down gold will be down dollar will be up but now we've been seeing stocks have been so relatively down but gold has been relatively up so they were not understanding like hey why is gold not following the path that you told us with the gold stocks again similar to cryptos we expect when stocks are moving down maybe they fear the dollar is rising cryptos should be falling but we saw BTC coming from 15 to 25 so they are like hey again Tarrus there is sort of a disconnect between all the assets in your lituambia hey dollar is doing this pound is doing this so it's again I always say like it's not directly that if this happens you see like and that is the challenge with fundamentals like data zinakuja zikiwa mob saizi there is the conflict between we are crossroad between we are now again not increasing rates we're starting to reduce rates a bit probably again maybe even with the fears probably even feds might now even stall at maybe stopping first of all increasing rates and like that combination I think it like people take it at to face value okay if stocks are moving down gold must be moving down you have to look at different factors affecting different assets because again if you look at something like gold gold is a safe haven asset that is why probably it's rallying up against and stocks are moving down that is because guys are moving probably from stocks which now has risk of maybe again we are going into a recession and now they are now moving up their money into things like gold things like yen
what you're saying is something people I think maybe should understand more some people think maybe this is my assumption that when markets are moving down it's just moving down when markets are moving down people are making losses people are coming out of their positions
true
and investors
people are making money
exactly now when people are coming out they're staying with the dollar which now dollar is rising that's why there's more demand for the dollar you're selling this stock staying with the dollar and now most people take this dollar and say hey this one is not really safe even let me put it now in gold now that's why you see now gold going stocks are falling dollar is still also rising because some people are just staying with the cash piles so
but I also feel like most people also forget that it's about capital flows you know when you're talking about this thing most people assume ni pesa yangu na yako as our money it's useless because at a 2 million at a 10 million dollars is nothing when we're talking about capital flows we're talking of the JP Morgans the Goldman Sachs the Bridgewaters Bank of America those guys who can buy in 10 billion a billion those are the people who when we say we're moving from stocks to gold
we're talking about them so usiconfuse na ni pesa yangu mimi natoa position ya gold hapa kadogo now for us now where we come in to add on what you're saying the big banks have made their moves and when they make the moves we see market now technically moving to part of least resistance which is in this direction now us we come and participate in that move what we're seeing we are not trying to say I want this dollar like what we're saying we believe stock should go down but it's not going down so I'll take a trade and go
Because
But when it starts going down, now we switch, you know.
and then you switch now your positions. Because also to just clarify on what you are saying, I think also like for most people, they forget that fundamentals are lagging in sometimes.
Yeah.
Markets are always ahead of the fundamentals. 6 to 8 months ahead. Like for the dollar positions that you guys are talking about, rates being high, the dollar being up, the dollar came from about 89 all the way to top at about 112. That move was pricing in more than a 5% rate hike. Markets had already seen that rates have to go up and probably rates will have to go up to this point. And if rates go up to this point, the dollar should trade here. And that trade took place long before Powell answered to raise rates. Long before. Even right now.
I remember Powell raised rates in March. And the breakout from that range happened in... I think was it September of 2021.
The previous year.
Yeah. Then September, October, November, December, Jan, Feb, March. 7 months.
Because I remember that time November, October
6 to 8 months
is when now we came out of our cryptocurrencies.
Exactly.
Even
November.
before the interest rate started, and markets started
exactly.
dropping from that time.
From that time, right? So if you just think about it, most of these things, we just look at fundamentals to understand the environment. But the markets will always tell us this is what the fundamentals are right now.
Yeah, true.
The markets
that is why
will
we are
tell
saying,
you.
like the markets with the fundamentals, they are resilient.
Exactly.
Like the fundamentals don't point to where
the
price
market
of the
is.
should be.
That's the point you're trying to pass across, right?
Yeah, because I normally tell my students, when you're going to learn, fundamentals will answer the question why, technicals will answer the when, what,
how.
Yeah, because if we're going up, how are we going up?
Is it
when
a fast
did we
market?
turn? How were we turning? The fundamentals will answer why is dollar rising, those things. But just that, now most of the work is back again, technically.
But I still feel like this will be a bearish year for me, for stocks.
Yeah.
I think if you're betting long term, I'd still be short heavily. I don't see any bullish factors for this market at this point. I still see none at all that would cause maybe Nasdaq or the Dow to create new highs. I think actually they should be creating new lows, like you're saying. Maybe Dow somewhere below 30,000, around 25,000. That's where you should be trading. Those are the prices. I think gold kwanza inafaa kurudi huku 1500. Sijui inafanya nini huko 2000.
Gold is relatively high again. Yeah, but for the
Gold is
safe
also
haven
high.
reason, you also seen yen also has been having some comeback because yen had a very beating last year.
Serious?
Heavy
I
beating.
don't trade yen.
Had a heavy beating last year.
It's made a
trading
comeback.
lower.
Last year, if you wanted to make money, you would have been long dollar yen. That move was a straight leg. Hey, it was a very good move. Like for long-term traders, I think those guys who trade long-term, that was a very.
And was this?
And it was a carry trade.
That's
carry
what
trade.
trade.
Very simple
It's a
carry trade.
This one is
Yeah.
negative interest.
one
And these others are just increasing.
Those are
Okay.
very basic
clean
trades.
bullish move. Yeah.
So those are also some trades which I feel like if you're trading and you don't know those, I learned that economic 101 trade from Paul Tudor Jones. He likes saying if you're trading, there are those trades which are so basic.
Yeah.
They're hiking rates, short stocks, short this. They're lowering rates, buy stocks, long this. Like those are simple ABC trades. Like they're not complex. Kuna trades zingine ni a bit complex. You have to do some thinking. You have to understand they're moving from this point to this point to this point to this point. So this will happen. But the others which are quite easy to tell. Like that dollar yen trade.
Like especially in the direction. On the direction, it's easy.
Exactly. Timing
inaweza kuchenga kidogo.
like in direction.
Direction, you should be easily right.
Look on summer, you're right on direction, wrong on timing.
Ukiona pia uko wrong on direction.
You're totally wrong.
Not vaguely right.
Step out.
Can you be wrong on direction and right on timing?
I know.
Wrong on? I'd say again.
Wrong on direction.
Wrong on direction, right on time.
We want the direction, Ken. We don't want the time. Hey, but pia time pia.
Time ni muhimu.
See, but you can't be wrong on direction. If you're wrong on direction, your trade is wrong, Ken.
And timing. I'm right on timing, remember? But I'm wrong on direction.
Exactly.
So now,
like,
that's a tricky one.
I'm wrong on direction.
You're wrong on direction.
But right on time.
So wait. Let's put it practically, pragmatically.
I don't think
So-
you can be right on time.
so wait.
You're wrong.
You want it to be you're wrong on direction.
Yeah.
So you bought.
I bought.
So he's selling gold.
So you're selling gold, but you bought. Because you're wrong on direction. It means you took the opposite trade.
Direction is up for gold, but him is
I'm
short
selling.
gold. But that he's right on timing. How?
See, I can just sell it when it's about to just correct. Like, I can get it right, yo. The market can be moving
So direction,
higher.
market is moving up. But you came and sold.
Market is moving higher. Let's say like even let's take a move like yesterday. The market was moving higher. But I could have shorted 64 to 50 and I'm out. I was right on just timing, but very wrong on direction.
Long-term direction.
But you had a short-term direction, which was right.
Very short term.
Yeah,
I'm
it was a
saying
short-term direction.
context
So
wise.
Tarrus, you're saying you shouldn't be wrong on direction. Direction
Yeah,
ili
that
ndio
you
trade
were right
umechukua.
on short-term direction.
Nilikuwa right on timing.
You're right
The
on both.
direction, still the market is moving up.
If the market moved up, you only make dough on that short-term move. That short move.
Unless you talk like this, you are wrong on direction, right on timing. You sold at a very good point. Tuseme hapo 88 ifunguke. Yanguke, your target is still 50. But yanguke hadi 70. Tena iende.
Si hivyo ndo nasema.
It was the right timing hapo kwa
Timing.
sell hapo.
But
You sold
direction.
right wrong.
Wrong.
Yeah, Ken has a point. Ken has a point. It has a point, Ras.
You can be right on
You sold
timing.
hapo palituli turn.
Our
But
interest, our interest here is alimake aje dough. Not where the markets went.
No,
the
no,
direction
no.
he took, the direction of the trade.
No.
So you're talking about a right or wrong answer.
Me the direction of your trade, not the direction of the market. If you're wrong on the direction of your trade, you're wrong.
Look.
Now I'm talking
His
of
timing,
direction of the market.
tuseme his trade, he was aiming for 1950. But he sold hapo 88 na ikaanguka hata ikakam 60. As in he sold hapo.
Kama jana.
Hapo. He entered at a very good timing.
If you made money yesterday as a seller, if you made money yesterday as a seller on gold, you are wrong on direction. But maybe you were right on timing.
Kidogo tu.
That's the only way you would have made money
Unless you
yesterday.
say like the general market direction and
Exactly.
like your
That's
direction.
what I'm saying.
That's what you're saying.
That
yeah.
makes sense.
That's
The
what you're
general
saying.
market direction.
General was up. But al time kadogo tu yakashort.
And come dough.
In out.
But yeah, you are right in that short-term direction. That is
It's like gold. Even if you talk about it reality, gold, and I remember that trade I took, ilifika 30, alafu ika drop hadi 15, 12. So maybe you can get a short term hapo.
And then ikarudi ikaendelea. So ulikuwa right on timing but very wrong on direction.
But now you guys want to tell me, for me, how I trade with my pivots, I'm mostly wrong on direction.
We'll talk about that after
Why
this.
just wait on timing?
We don't want to sell your proprietary stuff. We talk about it after.
Okay, if you want to learn that, it's a very
So we're saying
powerful
what?
system.
We're saying you're very wrong on direction all the time.
So with direction.
I think to just sum up as we are
That
summing
is true,
up,
Ras. You're normally looking for short-term corrections. And that's why you're contrarian.
that he's normally wrong.
Because you're in the opposite direction. I don't mean that he's wrong. You shouldn't get
I'm in the
wrong
wrong
here.
direction.
I don't mean Tarrus is wrong. He's in the wrong direction.
I
That's
take
what.
short-term direction.
But anyway,
Yeah.
say good.
So I was saying, as we sum up, we can just talk about history of some bank runs. I think the first one that comes to mind was one that took place in 2008. We saw Bear Stearns, Lehman Brothers.
And that was an economic collapse, global economic collapse. But
Yeah, that was a
which
disaster.
ilianza tu na your bank run, yeah.
It started with a bank run. I think also we saw one with a big man himself, Benny Madoff, when he started the Ponzi scheme. A bank run is also what killed him. That's what made him discovered. Those are the two that come to mind, top on top. But I've seen others also.
I think also in the Great Depression also it was
We had
something.
some,
Yeah,
yeah.
there was a bank run also in the. I think every time there's panic, people will go for
Yeah.
the money.
So you just want your money in the house.
Even look at most of the Ponzi scheme. That's how they die. Through
People
bank
coming
runs.
for their
Yeah,
money
coming for their money
at the
and
same time. All of
At the
it.
same time.
leading to a liquidity crunch. You
I
can't
think even
service
if you
it.
look for bank runs, I'm sure there are many. Maybe some are not
Yeah,
even
here in
famous.
Kenya, they told the First Community Bank in
Yeah.
December had it. Even
Yes,
recently,
bank.
there's a bank recently. Just think this month.
Sasa
Hapa tu
lakini hizo ni
Kenya.
bank gani? First Community Bank.
Can just a question? Can such a thing happen? Can there be a sacco run?
Yeah. Why not?
Yeah, there can be because even SACCOs, yeah,
If
they
you
also
mismanage, bro, we are coming for our money. And the minute we come for our money, all of us, it's a bank run.
Yeah.
Yeah.
So makes sense. Yeah.
I feel like those things are inevitable.
Yeah, those things in the end.
Even I
you
think
don't manage risk.
even in investments, like that is like even in investments, like you can let's say you're an investment manager, you're a fund manager, you're having pools of funds from people. You've invested your money, let's say, in same things. Let's say long-term bonds. You've been invested maybe in Safaricom, which is down almost 50%. Safaricom, by the way, it's trading at 17 shillings right now a share.
Yeah.
At how much?
17 bob. Yeah, it was down, I think, was it
By the dip.
more than 20%
By the dip.
last week?
By the dip.
Yeah. What was I saying?
By the dip.
Don't listen to Ken. Buy the strong.
Don't buy something that is going down.
Oh yeah. I was saying.
It'll dip you.
Yeah, like you're a fund manager. You've invested basically. Let's say I have $1 million from my clients. I have some money in Safaricom, zingine ziko just in assets zenye nimezihold. Trades zangu sijazifunga. Again, that is what happened to not Bilakman. Bilwang. It was sort of a bank run. Like Credit Suisse came for their money. They were like, "Hey, yo, give us our 4 billion."
Credit Suisse no ina crash.
So this guy is holding trades. The trades are like hazijafikia baby.
Target, maybe even they're trading negative.
But the person who had given you the funds now wants the money back.
What was that risk called? Hardmarks talked about it.
It's
called
That risk
the
where
risk
people are
of
coming for their
investors.
money. He talked about it.
It's called the risk of.
There's actually the risk of closing your, like, Kasa easy. If SVB hadn't booked that loss by selling those bonds to Goldman, wangekuwa sawa. But now the issue is they were selling those bonds because people wanted the money.
So they wanted liquidity.
Yeah, if people SVB tu wangekuja tu ambie majamaa cheki, your money to invest in long term bonds.
Mungoje long term. Kwa short term.
Tusaidiane because both of us would know that hey, yako is dead because I have your money. But yeah, I think it happens. It can happen not just to a bank, to an investment manager.
And that's one thing you should learn also. There's no loyalty when it comes to my money.
Hey, ni yangu bana.
My money, I don't care how umeperform for 10 years good. Kidogo tu
Julius said, yangu ni ya sweat.
Yangu.
My hard sweat.
I had money. Don't play with it.
Go cheze.
Yeah.
But I get your point. Even in hedge funds, investments, people come and take their money. You have positions that are running negative maybe, which in the time to become positives,
Yeah, probably.
But
like,
guys,
for this, yes, it was a sure, like it was a risk-free trade.
Long term.
Just in the long term. But in the short term, the risk was too much. Like, again, you've taken short-term deposits. You've taken short-term deposits from these banks, like actually working capital. That money was purely working capital. Startups wananga atidoi kwa bank inalala. They use that money. Oh, you're using someone's working capital to buy long-term bonds. Hey. Again, I don't know how these people manage risk.
And that's the question. And apparently, the person who was the CFO there was also the CFO of Lehman.
Yeah. Exactly.
He's a former CFO Lehman.
Lehman Brothers. Yeah. That story was in that the edge of money.
Ameacha hapo hivyo fingerprints zake unaweza
unless anzishe kampuni yake
that is why the president just came and said, hey, this one you could have managed it better.
Yeah, you could have managed the risks better.
Yeah. Angeba hizo matu ya nwaje 30 years.
Nasima nasemanga. You look back, it's easy to say, it is very, very easy, like to say, you could have done this or that or that. But when you're making those decisions, you'll always be making decisions forward.
And we knew there was that interest rate risk, you see.
Yeah.
So, the fact that you have bonds which the bonds which will be issued next year will be more attractive than the bonds I have right now. And I'm still holding them.
Aye.
Hey,
offset some risk.
It could be a loss trap. It's a pure loss trap. Ungekubali tu. The moment interest zilitoka 0.25 to 0.5.
Cut
by
loss.
0.75.
Cut loss.
So one thing,
toka.
Markets don't care who you are.
Yeah, that's
Kupinya,
true.
they don't care. Even if you've made money for 60 years,
I think we'll do one episode of people who thought they could corner the market. The likes of like Hunt Brothers. We should do people who thought we can corner it, and then
even Livermore himself.
Even Livermore is original.
He used to corner, but he limshika mwisho.
Hey, but he used to corner the market. Yake ikuwa jokes. Hey, he used to drive up prices.
When it cornered him.
But I remember he made a summary. I'll look for it now before that. He made a summary about
I believe no one can corner.
You can't corner the market. Even with a quote,
man.
you can't fight. The market is sort of so to say like a god. Like yondo kusema, it does what it does. You can never tame it. Hata kwa gym, hata usikie sijui guys manipulate. How manipulators also
they are manipulated all times.
Kuna siku zao zinakujanga.
Si wanasemanga I want to trade like the banks are now down.
Trade independently. It's tough. It's funny how people always meet some new traders. I just listen to them speaking. And someone saying like, banks are losing. Banks will lose. Hey, mnafahamu hizo books zao haki. Mtashtuka. They lose a lot. Not just
very few good hedge fund managers, good investment banks. That is why even if you look at just things like JP Morgan, si wengi wasikianga JP Morgan, Goldman, very few. Morgan Stanley. And I think like that is I'm really longing for when that thing will come to Kenya. Like we have
what will come?
The age of investment banking in Africa. I think that is
it's
starting, but we really need to
have a long way to go.
Yeah, we have a long way to go.
And is it the coming of the age of investment banking, or is it the coming of new investment banks which focus on global markets?
Global markets.
Because I feel like we have investment banks, but most of them focus on local markets.
Yeah.
But now, we are the new
global markets,
people.
The global.
Who misg much about the local market. True. But if you ask me about the US markets, the Europe markets, I can tell you way more about those markets than this market.
Like the other day we went to the those guys. The
local markets.
The guys who are an investment, but they focus here. They don't. We're telling them about global markets and all. They don't really understand. They're actually talking to us so that they can get to understand, okay, how do you look at global markets? Because they're saying the local market is dry.
Yeah, the local market
liquidity is dead. And remember local markets when they're doing, most of them is long positions, not long short. So,
yeah.
So I think we can end it there for today.
Yep.
I think that was a bit extensive. We've shared about SVB. Same thing, ripple effect causing. I think that was what I was to just ask. Like, do you think this will be a systemic risk whereby it can lead to sort of another meltdown in the economy? Like, can it lead to even probably guys not believing in even the credibility of the Feds?
For now, not yet. I don't think so. It can lead to, like we were saying, it's like a domino effect. It starts 1, 2, 3, then yeah, but
the Feds came and assured people, Americans, your money is safe.
As long as these guys still have the printing power to print.
But you just always print inflation.
Yeah.
But we
saw QE happening. Feds juzi walipeana to 70 billion.
But you sasa si kama ile ingine vile mnasema hiyo bana ya
like it was a huge spike. Kumwangalia hiyo graph Ken, I think we'll attach that graph. I have it. I'll screenshot it again. I'll send it to you. It's a spike. We were doing QT, now it's QE again. Hapa markets kuna venye
economics hapa inakata.
Hata even if you look at stocks zilichanganyikiwa.
Because I feel like right now we have to accept that, and the Feds people have to accept. We have to go through pain for us to get to the other side.
That is what Powell says, but Senator Warren is not getting it. Like,
Warren,
there's a pinch you need to get.
Warren is politician. Warren, hello economics. Ajia Adam Smith.
Exactly, like you have to get some pain in your endo to stabilize stuff.
We have to accept for the next 1 or 2 years, pain has to come. We can't run away from it.
And again, I always like saying this, how for the US economy, like it's a sophisticated economy, like anytime there are these issues, unemployment, inflation, it's always a worry with the central banking system. Here in our country, we have a mandamano in the next one day to the president because of high cost of living. It should be to the central bank governor. Like, bana, tufanyaje bana, rates ziko at 8, let hata 5 kwanza bana, tupate cheaper money, but I think that is the cost of living in a
nutshell.
developing country. Let's not call it third world.
So cool.
Yeah.
So we end it there.
That's it from me for today. I hope you've learned a thing or two. Again, we are learning this much from just research, being in the market. So it's not rocket science. Just get some good research, listen to podcasts like this, and you'll learn much about what's happening in the markets. If these things are interesting you, probably you can want to learn about financial markets from Financial Hub. And yeah, we are taking in students still. And I hope you will be getting to know each other better soon.
Cool. So that's it. Remember, guys, stay woke, stay financially literate. See you soon.